rather than later. Hi, thanks very much for joining me. My name is Rocky Outcrop. This is, of course, Tezos Technical Analysis. I am the OG technical analyst of Tezos on YouTube, so be sure to hit that like and subscribe button and come back because we do this on a daily basis. What we're seeing here is that the current price action, looking at the 30-minute time frame, by the way, so starting off here on the low time frames, is operating below that $2.22 area, and of course we have cracked down currently below this white upward sloping trend support line, jumping up towards the 24-hour time frame and taking the Bollinger Bands off just temporarily so that we can see this at some point here along the way with a little bit more clarity. You can see that we are actually now moving down below this line and coming down to test in at the median line of this pitchfork we have in the background. Now, this isn't the only pitchfork that we have, so we'll also see how it ties up with other ones that we're looking at as well. But the key area for us is how are we going to, is this area, is this zone? Now, we do not have enough yet still, even at this price point, to really say that we've got enough of a breakout on the go just now. Looking here, you can see the increase in volume is minuscule compared to the volume that we've had, for instance, on this period so far towards the downside. Now, what we are actually doing, which is of note, is coming in with the potential to close below that $2.24 area where we saw our previous low, if you want to call it that, in here. Now, if this was to be our previous low, it means that the next high we had was a lower high, and of course then the expectation would be that you'd be closing below that area because you're starting to form a downward trend, right? Is that not what you're kind of saying when you start to put those two bits of pieces together? Well, let's see how it goes, because I don't want to see the increase in volume if we are going to be pushing down past this zone here with regards to this one. Now, if we did as well, actually, in terms of the really, really broad picture, just going up towards the weekly time frame, see a turnaround here at this point. Don't know if I'm going to get access to my white line on this one. No, I'm not. But if we do see this operate as a sort of double lead-in area, be sure to be just to be aware that this could evolve in a very, 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 very broad time frame picture into the sort of the bump and run reversal pattern. But of course, working in the other way if you were to see it kind of knock down this way again. After coming back up to fulfill any future destiny above $4. And in terms of looking at it from the other point of view then as well, once we break past this zone above us, if we do manage to do it, just hide the other ones off here, if we manage to push past these zones over here and go towards the top side, then of course we're going to have to look at that as being potential reversal sort of support, because when we go back out and out and out, we can see that we've got this big chunk here where you could potentially put us in a sort of parallel channel. And if I put it on logarithmic chart here, you can see that essentially we've been consolidating for quite a long time. So you can just draw this all back into perspective again by saying that that ultimately we're going to be looking towards massive broad stroke structures in terms of the support and resistance on this one in around about these areas. So first stop is of course this $2.20 area, and the next one towards the downside comes in at $2 or so. In terms of the broad term time frames, you can see that there's a big drop off in liquidity, so that's a very dangerous area for us to find the prices in. We'd rather see this operating as some sort of consolidation, dropping down the time frames then to build up a picture along the way. We can see that we've come in with a low here. How does that shape up? Well, overall, I suppose you could say that it's a higher than this low, having been preceded by a high over here. So we're still in that upward trend, and that of course then looks good. How does that trend itself look? Well, that's not so great, having that bearish divergence there at those highs, and then that means that we need to look towards these inflection zones in there at the 326 area towards movements towards the top side to even be sort of a realistic target after any retracement that we could potentially have against this trend just here. Oh, here comes the drawings again, but we can see chuck it all in the bin. I'm just going to chuck everything in the bin here. Hope you're all okay with that. You can see then in terms of any retracements that we have, that we're up towards the 50%. We could still even be looking up again higher towards that 320 area where we would just get a 618 golden pocket before retracing down the way. So that's why that becomes key as well. Hope you can see as in between those chunks of incredible mess, how we can pin together different aspects such as horizontal sort of support and resistance areas that we can see in the past, 618 Fibonacci retracement zones, the potential then in terms of trend, and whether or not we would get a turnaround off the back of bearish divergence, or indeed if this is just a boiling off of the overall trend. Because look at this, in this high that we had previously before coming in and putting in our subsequent high, we came up to the sort of all-time high areas on all of our oscillators down below, and if we just drop down the time frame, we can see that story actually continues with regards to all of the divergence chat that we've had as well. So that was the 2-day, and here we are in the daily, and it's the same story again all the way down. So if we continue this story down the way, then we eventually get down to this sort of a resolution where we can see that the important number once again becomes the 236 Fibonacci retracement in terms of both structure and of course our movement, and as well how we're responding with these valleys down here and the potential for support. And jumping back over to where we had our chart before and the other pitchfork, movements outside of this zone are simply in that area that we already classified in yesterday's video as being the fake out zone. This offers up then of course a very good long opportunity should we actually want to be judicious about things. I'm not a financial advisor, none of this is financial advice. Always do your own research before doing anything, especially financial stuff, and I suppose I would say other things like flying a plane. If you're looking at it from this sort of perspective, kind of wanting to capture 5-to-1, then you're just simply looking at it and saying that if we do this over a long period of time, it's coming up for a retest of that zone. Doing it over a shorter period of time comes up for a retest of the median line of the parallel of the pitchfork, parallel channel, whatever. Not breaking out of the structure in terms of the continuing towards the top side and changing anything from a broader perspective. Simply coming in for higher highs, giving you a huge potential moves towards the top side. If that were to be the case, coming in here with moves of again the incredibly greedy 30% that we spoke about in the Chainlink video just shortly there today ago. But of course that all is built on the premise that we don't see movements towards the downside, and of course we're right at that key area there, having moved down below this 236 over here and of course this red line that we talked about, and come in towards where we could at the end of our sort of patience with regards to whether or not we'll just see this flick around, and looking at this zone here of our previous lows, which comes in at where we find the lower end of the pitchfork. That comes in at that 180 area, and of course beyond there let's put on one of those faces where you have that type of thing on the go for us. Okay, so that's what's clear, and thank you so much for joining me. This video was a little bit longer than the other ones today because or probably was, it feels a bit longer because I was doing it as part of my live video. So check that out if you want to see more discussion about the cryptocurrencies across the market. Thanks so much for joining me. Really do appreciate it. Would love to see the channel grow. If that means you introduce me to a friend of yours, that would be fantastic, because let me say very clearly here, a friend of yours is a friend of mine and a friend of the entire Rocky Outcrop community, and we love welcoming new people to the channel. I hope everybody, by the way, in this video so far in the chat has said welcome to our latest subscriber here, Joey P. I want everybody to give Joey P a nice warm welcome who subscribed, by the way, in today's video. Anyway, check out that live video. Thanks so much for joining me. I'll catch you in the next stream. I'll be back again tomorrow with more of the same FOMO-free, greed-free technical analysis, helping you become an educated, self-reliant trader. Catch you again. Right, okay, cool. Now I'm back in the chat with y'all. How y'all doing? How are y'all doing? Hi, Rocky says, Navanethan. Hiya, buddy. Good to have you here. Have you